Yo, what's up, premium chasers? It's crazy how quickly things can change, huh? This market is an absolute bloodbath, but with these bloodbaths, there is massive opportunities, especially for retail investors, to get in on fantastic companies at fantastic prices and collect some juicy premiums along the way. In today's video, we're gonna be going over the top 5 companies to be paying attention to and collecting some juicy premiums. Let's go. Don't forget, guys, one lucky commenter down below is gonna win a free one-on-one option strategy call. Just drop a comment and tune into the next one to see if you won that call. But guys, it's insane, right? How quickly sentiment in the markets can change. I think we can all agree, right? Last month, we were flying high. Now, I mean, look at our heat map just over the last week. All we're seeing is lots and lots of red, especially with the growth companies. Now, with that said, there is a lot of opportunity out there that is presenting itself, right? We just all have to kind of like stay strong, stick to our plans, right? And retail right now is getting flushed out. We can see that, right? Retail doesn't have any more money to buy the dip. People are already extremely struggling out there. Credit card is at all-time highs. Car payment delinquencies are at all-time highs, right? Like there's so much bad stuff right there happening like in the just economy in general that retail is just going to get flushed out and miss out on this opportunity. That's the unfortunate truth. So I'm going to go over a couple of the companies that I'm really looking at, and I think any of us won't be upset holding them long term. But this is a time that you have to have that same feeling about the company that you were buying when it was hitting all-time highs, to have that same feeling about them when they're hitting lows. Okay, something I said last week. Guys, again, nobody was really talking about it, and I guess I've seen a few market cycles. I'm not going to say like, hey, you know what? I know everything I don't. Look, I'm a simple guy, right? But one thing I know, and I've seen time and time again, is that when the S&P 500 goes below that 200-day moving average and stays there for an extended period of time, bear market's coming, opportunities are coming, and there's only going to be more red. It happens every time. If like literally take that, put it in your back pocket, put it in the back of your brain, and keep that with you forever. Okay? And you could see yesterday, right, was the full trading day. Last week when I made a video talking about the S&P 500 dropping, it stayed there for like about 2-3 hours, and I was like, it's going to be back there. I'm not a mind reader. Look, I'm not one of these guys on YouTube that tells you I know what a stock's going to do. By no means. I've just seen it before, right? I've just seen it before. Once it hits that 200-day moving average, there's not much time, and usually it bounced pretty quickly off that, but it's going to come back, especially since a lot of the sentiment in the market and everything that's happening in the news nothing was changing, right? Like there wasn't like any positive stuff happening. So obviously, first full trading day yesterday, we were under it. We were under that 200-day moving average, and today more red. We're not by much, but we're red, and we're still under that 200-day moving average of $526. We don't know how long this is going to be, right? But history kind of tells us these bulls and bears markets. This should be encouraging to you. This isn't to scare you. This is to educate you. Most of these bear markets don't last very long. On average, the bear markets last 11.1 months. Right? So, like other bear markets don't last like anything. The COVID was 1.1 months. In 2022, 9 months, right? So this could be 9 months, it could be a year, it could be 2 years, it could be however long it has to be, right? Nobody knows. But the one thing that is happening and is causing this, obviously, Trump has come into office and he's doing the things he said he was going to do, right? Tariffs, right? Like he said he was going to do that, right? The Doge, right? Said he was going to do that. He's trying to make America more reliant on America, and to that, and he even said, I'll have to find like the clip or somewhere, but there was going to be a lot of short-term pain, especially in the markets. So this was like expected. This was said that there was going to be a lot of pain in the markets because of all of these changes happening really, really quickly, right? So like it shouldn't become as a surprise to you. And not to mention, guys, like these kind of corrections, these kind of drops, they're good. They're good. Things can't just go up forever, right? But again, bull markets, guys, again, they typically are lasting about 4.3 years. Bear markets, 11.1 months. Keep that in the back of your mind. Be long term, right? Let's get into some setups. Tesla. Bloodbath yesterday, down over 15% yesterday. Insane. If you believed in Tesla at 400 and you're not buying it right now, I don't know what's wrong with you, right? You gotta fix your mentals. Like, I'm sorry, you gotta fix your mentals, right? Because you're just a hype buyer, and honestly, if you really can't control your emotions and have the same belief in companies that while they're going down, unless something fundamentally changed, and you don't have it when they're like down 44% in a 3-month time frame, then like just buy funds on a monthly basis and sit and forget, right? But us as option sellers, right? These are great setups, right? Bottom of the Bollinger Band, well below now that 200-day moving average. Let's go take a look at some of the, let's go take a look at Tesla. Let's see if we got stuff under 200 now on a weeklies. What I have been talking a lot with our private community, there is information on that down below. If you want to do option selling, is looking at weeklies, right? Looking at weeklies, especially since you want to really get into companies right now. Look at this, right? 3 days from now, March 14th, 3 days from now, you can say you're willing to buy Tesla for $200 and you'd collect $200, $210, $212 in premium, right? In premium. That's cash from an options buyer on the other end. If you don't know what I'm talking about with option selling stuff, there's a link down below as well as a workshop. So just go watch. It's an hour long. Not here to waste your time with this stuff. We're not a pitch fest here on this channel, but these premiums are insane. Right? Like insane. Even if you wanted to do, let's say a little bit closer, 215, right? Right here, you'd get paid $485 today. Now, if you don't know, if Friday rolls around and Tesla, hits $250, you're gonna have to buy it. Obviously, you keep this cash that you got, this $500, right? But if it doesn't hit it, right? Let's say Tesla does recover, right? You just walk away with your money anyway because you're paid with that cash up front right away into your actual brokerage account. Okay. So insane premiums, NVIDIA, whatever you want to call it, right? Guys, insane again. So this is one again we're talking a lot about in the private community. Let's go look at the weeklies on this. And usually you guys already know I never talk about weeklies really. I usually go 30, 45 days out. If you go 35, 45 days out, these I'm just going weekly. If you go 30, 45 days out, holy moly, look at these. $420 you'll get as credit into your account for $100. Look at $100 NVIDIA. Who would have thought that a month ago? $410. Let's go look at what our return will be here on that. $410 on $10,000, right? Because every options contract is 100 shares, right? So 100 times 100 is 10,000, right? So you get a 4.10% return on your collateral of $10,000, and if you get assigned, you're buying the NVIDIA at a fantastic price. But honestly, looking at the weeklies, if you really want to get into it, because we don't know what's going to happen in a month from now. If you really want to get into some of these companies, weeklies may be the route to go. Like if you want to do like the 105s, you'd still collect a decent premium, about $160 in premium on the 105s, and like that's crazy, right? And we opened up green here, which is obviously not a bad thing. Next one, Google. Right? Google, right? Again, towards the bottom of the Bollinger Band, about $10 off that 200-day moving average, trading at 167, 200-day moving average at 177. Beautiful setup again. RSI 33, heavily oversold company. Let's go take a look at some of those premiums as well. I mean, guys, there's a lot of deals here. If you have money and you have companies that you believe in, like when they're on sale, that's when you buy, right? When look, I'll bring this chart up, right? When it's the extreme fear just keeps creeping down, right? Keeps creeping down lower. When it's extreme fear, you buy. When it's extreme greed, you sell. Like it's not hard. A 5-year-old could understand it, but it's hard, right? Because we're humans and we're very emotional creatures. So taking a look at these, again, fantastic weekly premiums. Nothing like that you're going to be getting like a 4% return on unless you go out about a month out. But hey, you know what? Let's say you do this weekly for 162, right? You're getting $124 or $197. You're actually getting like a free share by saying you'll do it on Friday instead of just going out there and buying 100 shares today at market value. Next one, Apple. Apple still down today as well. It just crossed. It did it. So I talked about this morning. I go live basically every single morning at 9 a.m. for our pre-market premium call at 9 a.m. and send out the recordings to and go through all these setups and stuff for our private group. But we were just talking about this. This is going to be a big support level again for Apple. Is its 200-day moving average, a massive support level, and it has dropped below it, trading at 224. And look, when it drops below that, usually that means there's a little bit more room to go, right? So it's dropping about over 1.5% today at 223. So let's take a look. I mean, come on, guys. Apple, are you betting against Apple? Not me. amount of cash they're sitting on, the financials, right? Like, yeah, no, not me. I'm not betting against it. Great premiums here. Again, 220s, getting paid $270 in premium cash. I don't have my juice button. It's on my bookshelf over there, but you guys here know. Let's just do a virtual juiced button smack right here. I know it's scary, but listen, we got to keep things lighthearted here, because when it's bloody in the streets, this is a great time to do cash secured puts and dollar cost average into stocks that you love at better and better and better prices. I can't, like, come on, guys. Like, again, if you're going into sketchy, weird companies, yeah, I'd probably not recommend that. I do what you want. It's your own life and your own money. But listen, like Apple, Google, Nvidia, like, we ain't gonna be complaining about that. And the last one that we're looking at here is Amazon, guys. Again, Amazon ain't going away anywhere. We're testing this, right? Look at this. We're testing that 200-day moving average right here on that. Again, massive support level for these kind of blue chip companies. And so if we see that kind of like stay below there, right, there's going to be even more opportunities to be had, right? So right now, guys, focus, right? If you have the money, I know it's a lot of retail like is just completely broke right now, so they don't have the money, right? I would not recommend anybody go into margin. Again, do what you want. I would not recommend it, especially for beginners. But if you have the money and it's been sitting on the sidelines and you are buying Nvidia at 140 and it's trading at like $100 right now, like, I don't know, like, maybe rethink your strategy and see where there's an opportunity for you and your portfolio. Guys, check out all the links in the description of today's video. They're going to help you start collecting premiums that we are talking about. We are option sellers here. We are juice chasers. We're not the Picassos of the candlesticks, right? We get in at companies that we choose at prices we choose and get paid for saying maybe, and we get to sell our companies at prices we choose and we get paid for saying maybe. All those links will be down below in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I will see you guys tomorrow.